Hi guys, welcome back to episode 4 of the Jewelry Space. In today's episode, we'll be talking about DP Abhushan, Khazanchi Jewellers, Ashapuri Gold Ornaments, and uh, yeah, somebody threw something and it just spooked the shit out of me. I think it was my mother. She's cleaning the terrace, but anyways, it was so scary when I heard that noise. It just completely ruined the flow of the video. But anyways, we'll be talking about DP Abhushan, Khazanchi, and Ashapuri Gold Ornaments. In the next video, I'll talk about episode 5. I will talk about Goldium International, and episode 6 we will be talking about IGI. Okay, I'm waiting for IGI ka con call ka transcript, which they have done the con call, but only the audio recording is available. I'm waiting for the transcript because it's easier for me to read than to listen. That's the only thing. Okay. So anyways, let's start with DP Abhushan. So DP Abhushan is in the same category as your Kalyan Senko, all that B2C. Basically, they are a retailer. Okay, they have their own brand and they sell jewelry through their stores. Okay. Now these people are based out of the MP Rajasthan area. They're a very localized player in that area. Now, if you look at the entire jewelry space, everybody is a localized player in a way or other, except for Kalyan and Titan, which has a pan-India presence. Now, even Senko also, if you look at it, although yes, now they are expanding and everything. The first, they started from the West Bengal area and they are very prominent over there. Similarly, PN Gadgil Jewellers also, they are very prominent, in that Maharashtra ka area. Okay. So similarly, DP Abhushan is in that Rajasthan and MP area. Now, when this financial year started, DP Abhushan had a very simple target. See, FY24 we had 8 stores. We want to take it up to 20 stores in the next, in the next, in the next 4 years. That is by FY28. We want to double the store count. That is number one. The second thing they told is we want to grow by 25% का growth rate is what we are targeting. Okay. And the standard jewelry that is there, we want to take it up from 6% to 15% in the next 3 years. That is by FY27. Now, when you look at the result, you will obviously see the result has been far well than what is expected of. Okay, because unka target kitna the revenue guidance was very conservative at 25%. But if you look at them right now, they have done the sales that is there. Sales has been up by 42%, and PAT that is there, PAT is up by 79%. So overall, a good set of numbers. In fact, if you look, I believe for FY24 versus FY25, if the same trend continues, they can do well and above 25% only. So in terms of the growth rate, in terms of number, in terms of margins, there is no problem. Even if you look at the volume growth, right? Volume growth is also very strong. Like unka do segment hai, gold and diamond ka segment. Gold is where the most prominent part of the revenue is coming from, and that gold segment grew. Volume growth was 19%, and diamond was 23% ka volume growth that they saw. And this is kind of important, right? Because if you look at the episode 3, we spoke about how studded ratio is getting impacted for all these jewelry players, and studded ratio is where your margin is higher, right? And we saw Senko ta itna bura halat hua tha. And in spite of being a small player, can you see over here, inka us diamond category mein, the studded category mein, the diamond jewelry especially, that didn't get impacted over here. It is still strong. It grew by 23% on a year-on-year basis, right? The volumes over here goes to show probably even these people, the contribution that is coming from the solitaire part of the diamond, which is where the most impact has been there, they probably don't have significant portion of the revenue coming from that segment. Okay. Now coming to the store expansion, like I told you, in FY24 they had 8 stores, and in the next span of 4 years they want to take it up to 20 stores. So that is like a roughly 25% kind of CAGR you can expect with the store expansion. And in this year the target was to open 3 stores. As of Q2 they had, as of this Q3, they opened their stores in Ajmer and Neemuch, that is there. These were the 2 places. And in Ratlam, which is the 3rd store, which is supposed to be of 12,000 square feet, usme 8,000 square feet is for the retail and 4,000 square feet is for the back-end operations. That will be done by March of 25. In Q4 it should be up and running, right? It is a big store for them, up to jaise maine bola 12,000 square feet hai, which is one showroom. Okay? So overall numbers has been great. Everything is great. In fact, these people are planning to do a QIP of 600 crore, because they, like I told you, right, the plan is to take the store count, double the store count in a span of 4 years, and for this you need money. And all of these 20 stores that they're opening, it is going to be COCO stores, company owned and company operated. These people are not very aggressive in terms of franchise, but also at the same time they're not close to the franchise idea also. They're telling ki like, probably we could open 2 to 3 franchise also. I mean, nothing as of planned right now, but it is something that we're looking, because ultimately jab aap coco karte ho, the scalability option is quite limited over here. Like with Kalyan also we witnessed it, right? When they were doing coco, they were only limited to the south of India, but once they shifted into that, FOCO kind of operations, they started venturing into the north of India. Similarly with Senco also the same thing, right? They were, the scalability ka issue aa gaya tha when you have to like scale outside of your area, or of your localized territory that you have. Okay, so overall good set of numbers only. I think that there is no problem in terms of whatever the management has told and guided for. The execution has been remarkable. The only thing comes over here ki like, at the end of the day, one is obviously like this, there has been a Q3 is a great season. Q2 mein, we saw that huge 80% kind of growth is because of that Q1 mein kuch hua nahi tha. There was that sale that got pushed towards Q2. So will this 40 to 40% kind of growth will be sustainable or not? That becomes a really big question mark, because when we talk about Kalyan, like see, for everybody the competitor in B2C is Kalyan, right? And Kalyan can continue to grow at 40% if that SSG is there, right? If it maintains that SSG of 23%, not only can it grow at a 40% rate in terms of the top line, but also it can experience a huge operating leverage also. So that wouldn't be a problem for Kalyan, because Kalyan is doing a massive store expansion, because FY25 May Kalyan is targeting 130 stores. In FY26 they're targeting 170 stores, 90 Kalyan and 80 Candier. Okay, so the store expansion is massive. They've increased the store expansion on a huge base. So when you look at them, and when you look at over here DP Abhushan ka store expansion is coming up to 25%. चलो आपने बोला like 2-3 franchisee का store भी add कर दिया, कितना ही आएगा? 30, 32, still doesn't match up to the that rate. And obviously वही ना, you are a very छोटू सा player. Kalyan is a big player with respect to you. How will you compete? And there is also PN Gadgil right now over there, जिसका probably if that retail and non-retail part of the book is completely gone by the end of the year, probably it will become difficult for them to even compete in that race, with PN Gadgil. Overall great, but when you compare it to the other people that are there in the space, probably the growth rate is not, it's not that impressive when you compare to the other people. That is the only problem over here, because यहाँ पे results, I mean the Q3 is great season, आपने 42 किया and everything great. आगे जाके will this growth rate be sustainable? That is a big question mark. And looking at the store expansion rate, because the store expansion कितना है? Store expansion, let's say right now is they have around कितना? 10 stores. 10 stores से आप 20 stores में जा रहे हो, max to max 23, 24. That's a roughly 22 to 25% का CAGR, right, in terms of store expansion. So that is where a little bit problem comes कि like will you be able to the problem comes कि like this pace of growth that we keep talking about, will that be sustainable or not? ठीक है. The second player we'll be talking about is Khazanchi Jewellers. Okay, Khazanchi Jewellers is, I would say, is a combination of both B2B and B2C. 90% of the sale comes from B2B and 10% of the sale comes from B2C. उनका एक showroom है in Chennai, which is like around 1200 square feet. वहाँ से उनका B2C का sale आता है. Khazanchi is a really good competitor with RBC than Sky Gold, or than if you have to compete with DP Abhushan. I would say Khazanchi and RBC come in the same play, because both of them have that B2B and that B2C category. ठीक है. Now पहला बात है Khazanchi also. Khazanchi guided for that 25% kind of growth, and Khazanchi का था कि like for the entire year of FY25 we are targeting a top line of 1000 crore. Now when you look at 9 months only, they have done 1150. So obviously they have exceeded the guidance, right? Whatever the guidance is done, they have overdone it only, in fact, right? And if you look at them, sales even in this quarter has been tremendously good. Sales is up by 90%, PAT is up by 113%. Very, very, very good set of numbers. In fact, if you consider it with RBC का कितना था? 67%, I believe, that kind of growth. It beats RBC over here in terms of growth rate, right? Overall a great set of number. And उनका जो expansion plan था, they wanted to shift their the B2C का जो उनका जो बड़ा store था, right? From the 1200 square feet they wanted to open a bigger one in Chennai, up to like 10,000 12,000 square feet, and that will be opened in April or May of this year. It will be opened. Okay, and इसके वजह से, because of the store opening that they're doing, right, they want to like get the B2B mixed down and get the B2C up. So अगर ये store open होता है, in the first year of operation it can do 150 crore, and because of it Right now B2B 90 है, B2C is around कितना 10%. It will change, probably B2C will be 20 to 25%, and B2B could be somewhere between 75 to 80%. So this is where they are, they're trying to change the mix, because B2C आने के वजह से क्या होगा, यहाँ पे उनका margin जो है, because see any B2B businesses the margin profile is between 3 to 5%, right? And if you talk about a B2C, उनका margin profile can even go up to like 9 to 10, literally twice the margin profile of a B2B business. So यहाँ पे bottom line में ज़्यादा improvement आ सकता है, that is there. Along with that उनका एक और plan है कि like they will open 4 to 5 more showrooms probably in the span of next 2 years. Not just earlier plan था सिर्फ एक बड़ा 10,000 square feet का showroom open करना. Now they're telling 4 to 5 showrooms will open probably in the span of 2 to 3 years, but it would be in that Chennai ka area only. I mean, they don't want to step outside of Chennai area, at least for the span of 2 years. After that, probably they would be looking at other places in the south of India. That is what the target is. Now over here also same problem कि like one is आपका base इतना बड़ा है, आगे जाके when the base increases will you be able to, because see RBC has a clear cut target कि like FY26 में they will do 760 crore in terms of revenue. That is like a 40% kind of growth rate compared to FY25 ka year. And will this be able to beat it? They've been able to beat RBC good for Q2 and Q3 ka quarters, but will you be able to do so in the upcoming FY26 also? That is one thing to wait and watch. But as of Q3 I would say Khazanchi definitely is a better, I would say, in terms of growth rate and everything, it definitely wins the race compared to RBZ over here, definitely. The other thing over here is, I would say going forward, inka jo, let's say if that 4 to 5 showrooms do come up in a span of 2 years, then I would say inka jo B2C ka portions, it would increase even more compared to the B2B, and the margins mein zyada, we would get a huge improvement in terms of margin, which will result in better EPS, and as a result the valuation can get even cheaper. But having said that, wohi na ki like we do not know ki like will it actually be open, because they're just floating the idea ki like yeah we are looking to open. There is no clear cut ki like shayad 2 saal mein ho jaye, 3 saal mein ho jaye. That is something we do not know. ठीक है. The last we will do is Ashapuri Gold Ornaments. Ashapuri also has done really well because the sales is up by literally 103% to be specific, and the PAT is like 100% growth. 2 crore tha last Q3, now it is around 4.1 crore, right? So great set of numbers. This company does no con call or anything, right? And unka last time in Q2 they got an order from Titan also, right? That is from August 24 to let's say July of 2026, whatever, like they haven't mentioned ki like what is the order book from Titan they're getting, how many kgs of gold they'll be doing for Titan. Only thing they've told that they've signed Titan as a client for this period of duration, and whatever the order Titan would give them, they would do it. Okay, so overall good set of numbers by Ashapuri Gold Ornament. But here is the thing, Ashapuri is a complete B2B play, right? It is directly competing with Sky Gold, which is also like a 100% B2B play. Now think about it, Sky Gold, which is at like what 5,000 crore ka market cap, I believe. I don't remember what is the market cap of Sky Gold now. Let's just check once. हाँ, Sky Gold का market cap is around 4,661 crore, and Ashapuri का कितना है? Ashapuri, हाँ, Ashapuri का is around 243 crore का market cap. Whereas I mean the difference is so huge. Like कहाँ 243, कहाँ like almost 5,000 crore का market cap है. And even see Sky Gold is also growing. Na Sky Gold is also growing at 100%. Even next year they'll be doing 5,400 crores in revenue. After that it is going to be 7,300 crores. That giant is coming and increasing the guidance every quarter. They are also walking the talk. वो बोल रहा है कि like भाई मैं तो अपना manufacturing capacity, it is not enough for me. I will increase my manufacturing capacity. I'm targeting 4 ton per day after I increase my manufacturing capacity. I mean when with that capacity, with that market cap, if you are able to grow, and when Ashapuri is like at this small market cap, it is growing at the same rate, why there is nothing lucrative over here. Like it's not that Ashapuri has done something bad, but think about this, there is a Sky Gold ka investor. When will Sky Gold ka investor leave Sky Gold and come to Ashapuri? When Ashapuri grows faster than that of Sky Gold, right? That is what that is where the entire leverage comes for that shareholder. Why? Because Sky Gold will ultimately become a giant, base बढ़ता जाएगा, उसका valuation will be reached over there, right? And as a result क्या होगा, आगे जाके Sky Gold में क्या होगा, सिर्फ शायद EPS का expansion ही मिले, right? P का re-rating ना हो. So then what happens? आशापुरी becomes the next sky gold, right? Because यहाँ पे क्या होगा, बेस इतना छोटा है, आपको आपको पी का री-रेटिंग भी मिलेगा, ईपीएस का एक्सपेंशन भी मिलेगा. So for you to get PE का re-rating, you'll have to grow faster than that of Sky Gold. Then you also have to get operating leverage for you to get EPS expansion. But over here, when you see, Sky Gold is leading over there in both rates, both in terms of growth rate, both in terms of EPS also. यहाँ पे उसको दोनों मिलेगा, right? There is no downside for there, right? Like someone, why would someone leave Sky Gold and come over here? Because they're still growing faster than you, guidance बढ़ा रहे, capacity बढ़ा रहे, right? So that is the thing. So for Ashapuri over here, what happens is, although it is a great company, great set of numbers it provides, like in the race, right? For see, whenever there's a tailwind at the end of the day, and if there are like 10 companies in that industry, and that industry is facing tailwinds, if all the 10 companies that are there, it will make money for its shareholder, but there will be one company that will make the most money for its shareholder, and that will be that company who's coming first in this race, right? So you will always, so that is the entire logic, that is the entire like the magic formula I can tell about. So now Ashapuri also will make, Sky Gold also will make, but if Ashapuri has to make more money for its shareholders, then it has to reach a point where it has to grow faster than that of Sky Gold. But abhi to ke like koi difference hi nahi hai, and especially when Sky Gold is like, I mean, like, look at the market cap ka difference, kaha 250 crore, kaha 4000 crore, like that is the thing, okay? So that's it about the entire, I would say, B2C plus B2B category. I think the only company we haven't done is Utsav, but wo to like only in Q2 and Q4 uska result aata hai, so we do not know. We'll have to wait for another quarter for its result to come. This is episode 4. In episode 5, I will do Goldium. वो जो lab grown diamond का जो company है, I will do that, and the last one I will do is IGI, like I told in the beginning of the video, okay? So that's that about this entire jewelry space. And just a last update on regarding the financial sector workshop and the investment checklist workshop, that as you guys might be aware, that starting from March 17th, right, which is on the day of Holi, we would be hiking up the prices to 1999, literally doubling the prices from the current 999 prices. So if you haven't already grabbed it, if you haven't already got the course, get right now before the prices are hiked, okay? So that's that regarding the jewelry space, right? Great, all the companies are doing great, there is no problem, and hopefully there wouldn't be either. Bye.